Welcome to Momentum Monday. Today is October 1st, 2023. Howard is not joining us this week as he's stuck somewhere in a Mexican airport. So let's get straight to the market. Last week we saw an oversold bounce. The Nasdaq 100, the S&P, the Russell 2000, they overshot their August low. And then had a slight bounce. So they probably trapped some new short sellers and shook them out. And also maybe a lot of people were also stopped out and were shaken out as well. But what matters more is that last week we saw a positive momentum divergence as the major indices, the QQQ, the SPY, as they made that new monthly low here last Wednesday for the QQQ, and it was the previous Friday for SPY and the Russell 2000. As we saw those new lows in the indices, they were not confirmed by new lows in the overall market, meaning that a much smaller number of stocks made new monthly lows here on that day, which was one of the early signs that there could be an oversold bounce in the making, and this is exactly what we saw later in the week to close the quarter. Another early sign was the price action in momentum stocks. Many of them were already rising well ahead of that bounce that we saw in the indices. I'll give you a few examples. SMCI, it was already rising, since the previous Fridays, let's call it Monday, they were already rising. The same with ANF, 5-6 days, several days ahead of that bounce that we saw in the indices. Another one like Rivian, also another one that bounced at least a couple of days ahead of the indices. So anytime when we see momentum stocks outperform during a correction, that's typically a sign that there might be a bounce right around the corner. So when you have the price action in momentum stocks with that bullish momentum divergence, so it wasn't a huge surprise that we saw that slight bounce in the indices. So the way I played it, I took a position in AMD here on Wednesday as we saw that bullish momentum divergence and its relative strength in AMD, and it was in a tight, in a contraction mode near its rising 200-day moving average. So it was a pretty good spot to enter here with a tight stop, and the stock ended up testing its declining 20-day moving average, where I took off most of my position. And another way I played it was with TNA, which is the Russell 2000, 3 times bullish leverage ETF. Typically, during those bounces in the midst of a correction, we tend to see relatively high correlations. So it kind of makes sense to go with a leverage ETF instead of big stocks. It's much easier and you get plenty of beta, and you participate in the move. So what's the major reason behind this recent move, other than the technical reasons that I already mentioned, like the bullish momentum divergence, the price action in some of the momentum stocks? I think currently the market is mainly moved by interest rates. And the interest rates and in the Nasdaq 100, they have been negatively correlated in the past several years, especially in 2022, late 2021, when the Fed first announced that they intend to start raising rates. anytime interest rates would go up, the QQQ would sell off and vice versa. That relationship kind of changed at the beginning of this year. And it seems the major reason for that was that the market was expecting the Fed to start cutting rate at some point in 2024. But during the last FOMC meeting, the Fed kind of confirmed what is been saying all along, that it has no intention to cut rates in 2024. So the narrative kind of changed, or at least the market woke up to that narrative. And now we're back to that negative correlation between interest rates and stocks in general, but especially tech stocks. So anytime interest rates pull back, tech stocks and stocks in general rally. And we saw that in mid to late August when we had that tiny rally in the indices. It happened right alongside a pullback in interest rates. Last week we saw the same thing. We saw like a tiny bounce in the second half of the week, which coincided with a pullback in interest rates. So right now, especially considering that next earnings season is 3 to 4 weeks away from now, probably interest rates is our best clue to judge where the market is going to go. So I kind of expect that negative correlation between interest rates and stocks to remain in place until something breaks. So as of right now, next week, we start a new month, a new quarter. October is typically seasonally a strong month, especially after weak August and September. So if we continue to see a pullback in interest rates, which it would be completely normal for them to pull back to their rising, 20-day, even 50-day moving average, we might see a continuation in that bounce attempt that we saw last week. And, first clue would be, overtaking last Friday's highs here next week at some point. Okay. So maybe a few setups. Let's go over a few setups that are kind of looking interesting right now. Let's see. What was the one? Oh, WW. So all the weight related stocks have been on fire this week. NVO and Lilly with their weight loss drug have been on complete fire. Even NVO here that pulled back to its rising 50 days. So one can just watch it for a potential bounce here. Maybe if it goes above its last week high, one can enter with a tight stop at last week low for a potential move back towards the previous highs. And so WW is in the same field in a way. Obviously, they're not selling drugs, but they can prescribe the weight loss drug. It's also setting up near its 52-week high, and it's highly shorted. So there's definitely a potential for a short squeeze here as well. So one to keep an eye on. Another one that is very interesting to me is Groupon. One of the leaders this year is up, I don't know what, 400% since its May lows. They're still losing money. They just have a new management team out in Europe, a team that has a history of turning around a similar business in Europe and selling it at a much higher valuation. So the market expects that they might do the same here in the US. So the stock has been acting constructively. It's also highly shorted. So there is always that short squeeze potential in it. It broke out like one of the first stocks to break out to new 52-week highs last week. So believe it or not, Groupon is currently one of the price leaders, if not the price leader in this market, whatever that tells us about the current market. Another name that's looking interesting deal. Well, they had a earnings breakout and they've been consolidating sideways since then. So I would pay attention for a potential continuation, especially if they can go back above 20. Okay, another name, Dell, big earnings breakout, and then sideways consolidation, relatively low volume, setting up for a potential breakout above 70. Another name that I'm watching is WDC, building a new base here. Definitely has been showing relative strength. As you can see, it's been going up on big volume and pulling back on lower volume. So that's typically bullish, has bullish implications. Long term, it's still a big mess, but it's built a decent base here, so it can potentially break out. If the market follows through, it is shaping out to be one of the price leaders. And obviously, it has a pretty big flow, 320 million shares, so it's not a fast mover by any means. A few other names, Elastic, another one showing notable relative strength, broke out after earnings on high volume, and during that market correction in September, it kind of went sideways. So in theory, if the market indices bounce and they continue higher, this one should be among the leaders here since it held so well. And so that's another one that I keep on my watch list. A few other names that are interesting. FDX, they also beat earnings estimates recently, had a small gap up and kind of went sideways. So they're setting up for a potential breakout here near 270, 271. But again, it's a big cap stock, so relatively slow mover. But it's a really decent setup at this point. There are probably way too many eyes on it since it's a popular stock. Another name that is looking interesting is MIRM, Mirum Pharmaceuticals. They're not making any money, but their sales have been growing at triple-digit level. Relative strength rating of 96, and it's kind of bull flagging here with a really tight range last couple of days. So I would pay attention to this one as well if it can clear 32. And another one, XPEV, is a Chinese EV maker. I mean, just in general, I tried to stay away from Chinese stocks this year. They've been kind of select periods where I would just buy options in to participate in some of the short-term bursts in Chinese names like in Baidu and Baba and Futu. I've participated in some of those big moves here with just call options, just because they knew what my risk was, and my risk was the entire premium. If I put 1 or 2% of my capital in any of those call options, I know that that's my maximum risk. So I've been shying away from owning those Chinese ADRs as equities. So anytime I would play them, I would just use options, just because options offer a much more precise way to manage risk, because I know exactly how much I have at risk, which is the entire premium. While with stocks in this case, they've been gapping up and down all over the place. So I just still don't feel comfortable holding any Chinese related name via stock. So anyway, XPEV definitely showing notable relative strength and kind of setting up, with, I think 20 is a pretty big level here. Also one of the highly shorted stocks. So that's what I have for this week. I'll see you next week when Howard will also be back. So see you then.